Hey, can we talk real quick about what just happened this past Wednesday? The Federal Reserve just made a big move. They cut interest rates. Now, if you heard that and thought, great, mortgage rates are going to go down, hold on a second, because that's not exactly the case. Here's the deal. The average rate on a 30-year fixed mortgage in the U.S. as of today is around 6.26%, according to NerdWallet. The 15-year fixed is running about 5.56%, and a 5-year ARM is close to 7.15%. So, even with the Fed cutting rates, what we're seeing is mortgage rates actually creeping up in many cases, not going down. And I know that's confusing, right? But that's exactly why we need to talk, through what this means for you if you're thinking of buying a home. Now, whether you're looking to move now or in a few months, these numbers matter. I mean, they affect your monthly payment, what you can afford, and what decisions actually make sense for your financial situation. So let's walk through this together. We're not going to talk in financial jargon, but we're going to talk like two friends sitting across the table, figuring out about your next move. Okay, so now that we've gone through national averages, let's bring this home. I mean, literally, by looking at where we might be if you're looking in Danville or in the Piedmont Triad over in North Carolina. Now, these numbers matter because even a small difference in your rate or the APR can change what house you can afford and what your monthly payment actually looks like. So here in Danville, the rate for a 30-year fixed mortgage in Danville right now is about 6.27%. The 15-year fixed in Danville is roughly about 5.29. And for comparison purposes, whether that's an ARM or other loan types, Danville rates tend to be slightly higher depending on what lender you use and what your credit profile looks like. So let's say you're looking at a $250,000 home and you're going to be putting down about 20%. So financing $200,000 over 30 years, that 6.27% rate would mean your principal and your interest payment is going to be significantly higher than if rates were, let's say, 5.5%. In the Piedmont Triad, North Carolina, that's Greensboro, Winston, High Point. In the Triad, the 30-year fixed rates are roughly 6.13% for some lenders for a conventional purchase. The 15-year fixed rates are about 5.71 APR in similar local offers. But first-time home buyer programs and local credit unions sometimes have slightly different rates, sometimes a bit lower or with some extra fees, but these are good benchmark numbers. So what does that feel like? I mean, let me walk you through an example. Let's say you're in Danville, financing $200,000 over 30 years at 6.27%. Your principal and interest payment might be around $1,230 to $1,250 per month before taxes, insurance, and HOA fees, if that's a thing. Those aren't really common here. Now, in the Triad, the same loan amount, same down payment at 6.13%, you might be paying slightly less. That might be maybe $1,200 to $1,220 for principal and interest. The difference might not seem huge month to month, but over a 5 to 10 year period, that adds up. And the upfront costs, whether it's closing and lender fees, those can vary too. Now, why these local differences exist? Lender competition and overhead in different counties or cities. You have local real estate market conditions, whether that's home prices and demand. You also have local appraisal and property tax rates, which factor into what lenders will offer. A big one, your credit score. How much down payment are you going to make, and what type of loan are you going to get, whether it's fixed versus an adjustable rate mortgage, etc. So if you're watching Danville, Virginia, or the Triad, these local rates and numbers are what you need to measure your buying power. And see, whether it's wiser to buy now, wait a little, or maybe restructure what size house or budget you're targeting. You think that when the Fed cut interest rates, mortgage rates would drop like a rock too, right? That would make sense, but here's the truth. Many people don't realize the Fed doesn't directly control mortgage rates. What they cut is called the federal funds rate. That's what banks charge each other for overnight lending. It's a short-term rate. Mortgage rates, on the other hand, they're tied more to the bond market, specifically the yield on the 10-year treasury. That's influenced by a mix of things. You have inflation fears, you have investor demand, and you have market confidence. So on Wednesday, when the Fed announced a rate cut, the market reacted with caution. Investors started shifting money around, bond yields went up. That's why mortgage rates ticked up a bit instead of down. So in simple terms, mortgage rates follow the economy, not just the Fed. And right now, the market is still feeling very uncertain about inflation, recession talk, and future Fed moves. So even though it feels backwards, this kind of move is actually common. The key is knowing how to respond strategically, not emotionally. That's the big key. All right, so with all this rate movement and mixed signals from the Fed, the big question is, what should you do if you're thinking about buying a home right now? And this is my honest and best answer. Don't focus on timing the market. Focus on timing your life. If you've been renting and your lease is coming up, if your family's growing and you need more space, if you're tired of throwing money at rent that gives you zero return, then now might still be a great time to buy. Why? Well, because even though rates are a bit higher than we'd all like, here's the truth. You can always refinance if mortgage rates drop later. Here's the thing. Marry the house, date the rate. I've said it before. Now, what you can't do though is you cannot go back in time and grab a house that fits your family perfectly once it has been sold and it's off the market. Now, another reason is sellers are more flexible right now. So we're seeing more price corrections, which is a price drop. We're seeing sellers give concessions and even seller paid closing costs. I have two deals. I have two deals right now where the seller is helping my buyer with closing costs. Now, things you couldn't dream of, you can ask for closing costs when rates were in the threes. You couldn't ask for concessions when rates were in the threes. Heck, you couldn't even almost get in the house when rates were in the threes. Now I'm gonna get off that soapbox, okay? Now, waiting could also cost you more if prices of houses keep climbing. And I'm telling you, in Danville and over in the Triad, we're still seeing strong demand. You got a lot of people retiring to this area. You got a lot of people moving here because it's cheaper. So you could end up paying more for the same house later. Is that smart? I don't think so, even if rates drop. So if you're financially ready and emotionally serious about making a move, now's the time to strategize. You don't have to do it alone. That's literally why I'm here talking to you today. Now, let's keep going. I get it. The market feels like a moving target. You're hearing mixed messages. You got some folks talking about, hey, you need to wait. You got others saying, hey, go rush in. But here's the thing. You don't need to figure all of this out on your own. Look, I help people just like you every single week sort through this noise and get real clear on the best move for for them, not for Wall Street, not for social media, for you. And here's what I do that makes a difference. I break down real numbers, not just headlines. I connect you with trusted local lenders who understand our market and offer creative solutions. Now, if you come with a lender, that's fine. I really prefer you to work with my lenders, okay? I help you find homes that fit your life, not just your budget. And I'll walk you through the entire process so you're never guessing what comes next, David. But most of all, I fight for your success. And it was a good fight the other night on Netflix. I don't know if you saw it, but I don't help you just fight for the keys in your hand. I help you fight for the confidence you deserve to have walking into the next chapter of your life. Because I believe home ownership isn't just about buying a house. It's about building roots. It's about building wealth, and it's about building peace. So if you're ready to explore what that could look like for you, I got you. Please reach out to me. Share this video. That would help a lot. Leave a comment below. And guess what? I have a meeting link that gives you direct access to my calendar in the description below. Whatever is easiest for you. Let's schedule a time to talk and make a plan that fits your life, not the news cycles. They never stop. That's how they make money. But with me, you've got options and you have help. And you got someone in your corner who knows how to navigate and win in this market. Let's get you home. My name is David Totten, local real estate agent here in Danville, Virginia, also licensed in North Carolina. If this is your first time to the channel, I ask you to subscribe and turn on those notifications so you know everything that's happening here in and around Danville, Virginia and the surrounding area. Until we see you in the next video, I hope you found this helpful. We love you, man. Take care. Bye-bye.